day, everyone. Thank you for attending this session, and we are very glad to be with you today. So I'm Estelle Braque. I'm chairman of Curality, my own advisory committee, company, and I'm executive board member of the Africa FinTech Forum in charge of studies research. And I'm very glad to share with you some very interesting moments about open banking and more specifically open banking and financial inclusion. So to discuss it's very, very interesting question. I'm with experts today, and we have three experts. We are going to speak in English. I hope everyone is comfortable with that. So we have Michael Salmoni, who is CEO of Payments Innovation Consulting, and he will further explain what he does in a couple of seconds. We have Nawale Kuruma, Chief Digital Officer of EcoBank Transnational Incorporated, and Youssef Koun, co-founder Digital Send, already with us today. So first, let me give you the floor. Each of you, would you mind please presenting what you are specifically doing and why is open banking so important for you today? So Michael, please.
Bonjour Estelle, je suis très heureux d'être avec vous, mais je ne veux pas continuer en français parce que votre anglais est beaucoup mieux que le mien, comme en français. So thank you very much for inviting me to this, and again, apologies for forcing you all to speak and listen in English. I've been working in payments and financial services, especially digitization, for many years. Helping the European Commission set up PSD2 and open banking, and now traveling all over the world virtually in COVID and more physically now since open banking is basically happening everywhere. So I really look forward to talking to you about the potential of open banking, especially about inclusion.
Thank you, Michael. Nawale, would you mind presenting yourself?
Okay. So my name is Valai Kuruma, and I'm leading the digital and innovation function for the EcoBank Group. When we talk about digital, we're talking about the channel, we're talking about the data, we're talking about innovation, but we're also talking about the open innovation. And when you think about open innovation, open banking becomes a key component of your framework because it's really about how we creating this environment where the ecosystem can come together and enable services for the benefit of customers, right? Bringing more power to the customer, obviously, but also bringing more options and more capabilities. But it's really an ecosystem approach. So that's why open banking is critical for us. We can talk more about the various programs that we have internally, but it's definitely an important subject of innovation and defining the future for the banking sector. Thank you.
Yeah, sorry, if you have some headsets or the sound was not very good, I'm afraid the audience will not be able to hear you well. So if you have something, or maybe do something with the sound. And last but not least, Youssef Koun.
Hello, Estelle. So we are in the same place with Estelle. We're in Marrakesh for another event, and I'm glad to be here with you guys. When we talk about open banking, it's more about always technology, and as Nawale said, it's also about ecosystem. So my job currently is to make it happen. So it makes open banking available in Africa, maybe in a different way that Europe has imagined open banking. And the idea today is to share it with you, particularly to say how it can help financial inclusion. Maybe not using the same use cases that we can find in Europe, but really to focus on how financial inclusion can benefit from open banking approaches. So let's go for it.
Thank you all. So I would have first question as an academic. I would like to ask you to briefly explain, and it's not easy. Could you please explain what is open banking? Michael, would you like to start?
Okay, I'll give it a stab. Yes. I mean, for me, open banking is, as the name implies, it's opening up banks. In the past, you used to only get what the bank programmed in. So you only had the functions that a bank offered you. Whereas now they are connected via APIs to fintechs. And suddenly you get an explosion of creativity on what you can do on a bank account. So it's a bit like the movement from the Nokia phone, where the only thing you got was what Nokia had programmed into the phone, to the smartphone, where you suddenly get apps from 1 million developers, and they come up with the most amazing ideas on what you can do with a phone, which nobody would have thought of. And this is what's now happening with open banking. We have an interface called APIs to the banks, and that allows fintechs to develop totally new ways of doing credit and payment and onboarding and B2B and invoices and 1 million other things. And so it's opening up banks using the creativity of the third market. That's how I would see open banking.
Thank you, Michael. So let me move to a banker's perspective. Nawalai, what is your definition of open banking? Maybe you're on mute. We cannot hear you or see you. So let me just, the time you solve the problem. Yes.
Sorry, but can you hear me? I'm trying to figure out the sound.
We don't hear you very well. The sound is, you look like very far away.
Okay, so I'll try to find this an option, but can we maybe move on and or somebody else, and then I'll log in differently. Thank you.
Thank you. So, Youssef, what's your definition of open banking?
So, in fact, it's really, it's true how banks will open their system. But the thing is now to say for which purpose, particularly if we take it in Africa. So today we know that in Africa we have what we call intermediary people that doing transaction for banks, like for example the use case of agent banking. So it means that people use the system of banks in order to provide financial services, but not with the same logo, not with the same name of the company. So the idea finally for Africa, I think, for what is open banking is how banks, big groups can open the system in order to allow small financial institutions or new financial institutions or neobank to provide financial services to the population, and particularly inclusive financial services. So this is for me what is open banking, without talking, let's say, about which technology we use in order to be open or which framework we need in order to be open.
Thank you. So does it mean specifically that banks and financial services providers have to change their business model, or does it have an impact on the structure of banks, or like the way they provide the services? Youssef.
I will take one example, which is quite interesting. In Europe, there is Trésor. Trésor is very interesting. It's, let's say, a payment institution that helped 5 startups to raise more than 500 million euros. It means that they provide them the system, the license, in order to be able to provide distributed services in Europe. I will take examples that are using Trésor. Maybe you know them. there is Conto, Lydia, Swile, Shine, or Pixway. All of them are startups. All of them are providing a new experience to the customers that they're expecting this kind of experience. And Trésor is like finally a platform providing that. So this is the kind of example of things that we need to open. So it gives two things. First, new opportunities and new revenue that can be generated by banks, particularly by groups that are everywhere in Africa, and also to bring the financial services differently in the market. And I will take the example of Orange. Today, Orange are already providing this approach, not calling it open banking, but they are opening their system in order to allow agents to provide the financial services. So let's just imagine that instead to be this agent, the name is called Orange, maybe he has another name, and that's it. But the process is exactly the same. So this is the new kind of business engine. They are already there in Africa, not named open banking. They are starting very fast in Europe today, and maybe from Europe they have other, let's say, experience like this that can be shared.
Thank you, Youssef. We'll discuss. I really like us to have a specific discussion about Africa. So, Namalai, would you like? You are a banker. You are from from the banker's perspective. What are your views on about open banking from a banker's perspective?
Okay, I want to make sure now that the voice is better. Wonderful, wonderful, wonderful. Okay, so I think Youssef already touched upon our definition of open banking. Really, we see the open banking as being able to provide banking services through third parties within the ecosystem. And these third parties can be anything, agency banking like we're talking about, which will be retail distribution. It can be anything from product partnership, which sometimes, for example, we have to connect with e-commerce players or with telcos to be able to provide product services. It can also be technology capability, right? Which is really about data and how are we leveraging the data to enable and distribute new services. So the entire ecosystem and the openness to link to that ecosystem and deliver the service is what we define internally, in our open as open banking. So there are different components. You have the product component, which is important, but there's also technology, a key technology component. So how do you connect with so many players? That's where the API marketplace becomes extremely critical in that sense. And then you have the conduit. So if you're working with various players, you guys exchange, right? It's data, it's information. And once you get there, then you have all the discussion regarding the compliance and regulation, because you're exchanging people's information. So there's a whole control that comes in, and that start putting the right framework about how you enable that aspect. And last but not the least, there's the innovation. So all of these is really to provide the service to respond to customers' needs in a non-traditional manner and more effective and more holistic manner. Thank you.
Thank you very much. Very happy that we can hear you and your insights. What is so that I will ask a naive question, or I know the answer of the question, like as usual. But why do banks or any fintechs have to cooperate? My question is why banks were not able to develop internally these solutions, and why do fintechs need to go to banks? So why do we need to go to open banking? Michael?
I guess the question is for me or for somebody else.
I think it's for all of you. I would love to have your views on this.
Okay. So let me jump on it because I was talking. Let me jump on it. And so I jokingly say, if bank could change so rapidly for hundreds of years, the change would have happened alone, right? You don't need to look at it. No, I think banks have a legacy infrastructure, have a legacy process, have a legacy ways of working, and it's worked very well. The reality is changing fast, very quick. I think it's very difficult to be going with the same strength in one direction and try to do a pivot very quickly as the market needs, because you still need to continue to deliver what you are, right? And what you did that worked for you is still working in that direction. But you need a new ways of thinking about things, a new ways of approaching it. So the speed of delivery, the ways of working, new technology, even the philosophy of how to think about product, how agile are you? This is using a waterfall approach. All of this requires us to open, and you feed you more actively with fintech external partners. It's much easier, right? So I'll just give you an example in experimentation. So once we work with a partner, when we are working with a partner, it's much easier for us to do an experimentation outside than to try to do that internally, because all the processes that you have internal will be killing the experimentation even before it starts. So it's really complementary in terms of process. Thank you.
Maybe I could just jump in there if that's okay. Yeah, I would agree with everything that's been said. I mean, for me, the wonderful thing about open banking is that skills complement each other, right? The banks have the solidity, they have the capital, they have millions of customers, they have a good technology stack. But the fintechs have the innovation and the customer orientation and the creativity and the flexibility. So if you marry the two and have a structured way of getting those two together, then everybody wins. The fintechs suddenly get access to all the customers and don't have to worry about compliance and getting a banking license because the banks have already taken care of that. The banks get new channels to their customers through these clever fintechs. And the customers get totally new services. So it's really a win-win if this is done in a smart way. And to actually stay on the topic of this panel, which is inclusion, it's not only that you get better loans and better onboarding and better invoices and everything. There's a huge inclusion agenda. By the way, also in Europe, there are many people who are unbanked or underbanked in Europe and in America. But I've done some work in South America and in Central Asia, where there's, for example, a huge credit gap. There are many people who would love to get a small loan for their small business, but they can't because it's so difficult to access the banking system. And with these fintechs and open APIs, they can. And the same is true for insurance, right? For example, in Colombia, only 2% of people are insured, which means if you have a fire or if your business suffers some other unforeseen thing, then you're bankrupt and you're destroyed. So actually being insured is a really useful thing. So inclusion in loans and insurances is super important for an economy, and open banking can help facilitate that.
I will complete maybe with what you said, Michael and Nevlai. The thing is, when it comes to cooperate between fintechs or startups and banks, first of all, banks don't like risk. So first of things, they try to avoid the risk. And when a fintech comes, they're always coming with a business that there is some risk to manage. And the idea to have open banking, it means that we are going to share some risk we are ready to share this risk. And the thing is, technology is helping to anticipate this risk that we share by just publishing some APIs, by controlling the data that we share, by controlling the transaction that those fintechs or those startups can allow to do, or the product that they can sell. And one of the questions about the inclusion, I will say that what we find today in Europe, and it can be applied to Africa, the question, I want to start offering a new financial services. How I do that? I have two options. I can become a bank or a financial institution, or I can take the infrastructure and the banking license of someone else. So this is the question. How fintechs, I want to start a new business in financial services, how I can avoid to open banks and to use their existing infrastructure to go faster without requesting compliance team, without requesting back office team, etc., etc. And the cost in order to start this new business, if I use open banking, is 10 times cheaper than if I have to open a bank in Europe, but also in Africa, it's minimum, maybe I would say 5 million euros to start a bank. But if I use an existing bank like EcoBank, for example, or big groups that are available in different countries in Africa, it can speed up new businesses that banks don't want to try. And so this is, for me, the thing is, when we are open, we accept to share the risk. Banks don't like risk. So this is the mindset that is starting to change.
Thank you, Youssef. As a banker, I cannot say banks don't like risk. That their job is to price the risk and to, yeah. But I fully agree. And what you said, all of you, is that open banking is in the benefit of the stakeholders of the market and in the end at the final user. So there is a very interesting question from the audience. Do the regulators and regulation in Africa oblige banks to open their systems and if there are some examples? So what is about regulation? We know that Europe has European stakeholders have some difficulties to go open banking. Some countries it's very moving very fast. In other countries, not that much. So what is the case in Africa? Who would like to begin and answering this question? I know it's not an easy one.
If I can reply to give some examples. We have a status called intermediary of banking operation. It's a status that already exists in some African countries. What does it mean? That I am able to sell products or to distribute products of another bank. And I will give examples. In Morocco, for example, there is a product called Hsab Bekher. What is Hsab Bekher? It's a low-income banking account from Tijari Wafa Bank. But who is doing the distribution is Wafa Cash, is one of their affiliates. So this is a kind of example. Yes, in Morocco, for example, we can do that. So bank, so they work first with their affiliate before to open to other third parties. So this is the question of trust and risk. If I take the example of Senegal, the last, what we call the Stratégie Nationale d'Inclusion Financière, that has been signed, I think, by the president a few months ago. What they said, there is today in Senegal 6 third parties that are allowed to be intermediary. But what they said, banks has to help them more, has to take this risk, to support this risk, and to put the framework to support this. So I will say also in Senegal, it's already existing. There is companies that are doing that. So this is, I will take just those 2 examples because I know them very well, but I will let my colleague answer us from this side.
Michael?
I mean,
would you like to share some views on this?
Happy to share some views
part?
on what the global picture is, maybe. I mean, you know the African situation much better than me, but it's certainly true that in some geographies, it's very mandated. The regulator is enforcing all the banks. You will open up with these standards, of these APIs and these services. And others, it's more lax. For example, in US, using screen scraping and other technologies, they have been de facto opening up for years, even though there was no regulatory mandate at all, because it was felt that this is such a powerful model and this is so great that you get the banks with their solidity and their customers and their license, etc., connecting to these innovative, nimble fintechs, that even though the regulator didn't mandate it at all, it happened because it's such a big advantage to customers. So I'm not sure the question is really, should the regulator mandate that? It's how to make the system work for the benefit of all. And you can do that in a mandated fashion or in a voluntary fashion. Both are very popular around the world, and both models work.
And it's...
I completely agree. Yeah, so. No, I just wanted to say I completely agree with Michael.
Give you the floor.
I completely agree with the point that Michael made. I think when you look at the regulation, you have various approaches. Don't have a mandate. I mean, when I look at the regulators on the continent, what you see is there are some openness, right? So there are some openness in I would say in 2 or 3 key areas. There's one area where about partnership. I think in terms of partnership, there are some openness about how different partners can work with the bank, okay, and in enabling the service. So that's, you have the regulations of the country. So agency banking is one of these. If you look at, for example, in Nigeria, the PBSP, the payment banking license, for example, is one of these elements where the regulator is saying, if you do that, you need to work with the bank. So, but it doesn't, if you want to do it, if you don't want to do it, then you have to find other ways. You become a bank yourself. But there's no forceful integration that is required. The only country where I've seen some forceful action being put on the table now is regarding the interoperability. And that's the only really country that comes to mind is Kenya, where there was a forced, mandatory integration of all the, mobile money providers so that they can start exchanging and creating that ecosystem. So even that, right? So it's encouraged in many situations, but you don't see a mandate that is obliging you to share. Okay, but regulators spend more time, and I think it's important to keep on that, is protecting the customer. So in that exchanges, there are customer information that becomes available. So how do you protect the privacy of the customer? How do you protect the customer in a way that it is not being exploited, right? So you where in South Africa there's a POPI where it's a private, there's a whole regulation about what you do with the customer data, who you can with, what you can do with it, and what you cannot do with it, right? So there's a lot of on the regulator when that's really mandatory from that perspective. Thank you.
Yeah, thank you very much. It's the big question of sharing data from different institutions and related to trust you can have on these new other external entities. One of the jobs of the banks is information and data storage, security. Once again, let me rely on the question from the audience. There is a very interesting one. What is the place of microfinance institutions in open banking? So does open banking also apply to your knowledge to microfinance institutions, or the way we call them in Western Africa, decentralized financial services institutions? Who wants to respond that question?
I'll give it a stab if you like. Yeah, if you like. I mean, I tried to make the point earlier that because of the innovation that is unleashed by the fintech industry, you're going to get all sorts of new services. That includes microloans, that includes new insurances, that includes mobile money propositions. All these things are emerging much more on top of the banking system. So I think we will see a boost, or already are seeing a boost of these kind of services, especially in the regions which need more inclusion. But let me give you another example, which is maybe not so well known, just to illustrate the power of this. We were working with a private equity company that wanted to set up Islamic banking in a region, because in that region, all the people who wanted Sharia compliant banking were not served. So they were unbanked effectively, because they couldn't get any services which adhered to the specific Islamic laws. And what these guys wanted to do is to build a new bank, get a banking license, nominate a CEO, get all the capital, get all the processes. And we told them, why don't you just sit on top of a bank, like a fintech? Take established banks, which are already all over the place, and just access the accounts that are there using an Islamic layer that you put on top. And that, I think, is the kind of new approach that you can do with open banking. You don't need to get a banking license and go through all the pain of setting up a new bank if you just want to offer a particular new service, either a microfinance or a new insurance or a mobile or Islamic banking, whatever it is. You just add that on to existing banks. And that is so much more powerful, because you already have the customer base, you already have the banks with the licenses, and you can add these new services much quicker with much lower costs, much lower risks, and thereby enhance the service, and thereby, for example, also include all the people who want Islamic banking or microfinance or insurance or whatever the other services. So this massively increases inclusion while really reducing the risks and the costs.
Thank you, Michael. So, as a very, very interesting point. So, should go back to the title of the panel, about financial inclusion. Could you, Nawalai and Youssef, share some practical examples of open banking solutions that can directly or have improved financial inclusion? I mean by financial inclusion, access to financial services for people that are unbanked and people that are necessary in town. We know in big towns, big cities, it's quite easy to access all services, but could you share with us some concrete examples?
Okay, so let me jump on it, but maybe before answering specifically, I would like to go to the microfinance question, and I think it's a very good question, because if I was running finance today, I really think that I would be taking full advantage of open banking, because it's the fastest path to scale for a small institution. I can build that around me and open up and use different partners to extend my reach for the number of people who can use the service. I will definitely use that as a very good opportunity, as a platform for growth. The challenge is the microfinance institution as we know them today might not always have the skill set, the knowledge, and the platform to be able to do. But I think there are a few examples where you really see, and the one that comes to mind is Kuda in Nigeria, where microfinance has turned completely upside down to become a technology and digital financial provider. And it's really all digital, but they are considered as a microfinance institution. So I think there's something to be considered there. Now, for financial inclusion, mobile, open banking and financial inclusion. There are two examples that I can. We have various players, example, especially in cities, and that will be concerning more of youth population. A partner in Kenya who uses our API to open accounts for the youth segment. So obviously this is a population that, unbanked for us can be rural, it can be urban, it can be, but it's really not fully using the banking sector product yet. So that's one example that we have is our mobile lending product. So our mobile lending product is using the telco data, and we are using a third-party platform, and all of that is using to extend new loan product that can just be accessed by USSD, right? So we're using technology partner front end to provide either access to a simple bank account, entry-level bank account, or an entry-level loan product. Thank you.
Thank you very much. Thank you very much. And Youssef, maybe you'll take the mic. I'm sorry. Thank you for everyone. I personally have to leave, so I will give the moderation mic to Youssef, and wish you the best for the next discussion.
Thank you, Estelle. So I will continue. So first, I will also give some insight about microfinance institution and open banking. First, I will say maybe that it's a microfinance using open banking. It's finally another use case, and maybe is the use case that can be deployed very fast in Africa. I will maybe give some figures. It can be right, but it's really roughly some figures. Let's say that there is around 1,000 banks in Africa, different banks, groups, small banks, and there is 10,000 microfinance institutions, or sometimes even more. It depends how we put them in the categories. So, as I said, those current microfinance need to digitalize themselves. One of the questions, and as you said, Navali, they don't have the skills to go to the next level as banks has done since more than 20 years. So the question is, and it's also for you guys, so if tomorrow a microfinance come to you and said, I am microfinance, I have my license, but I want to digital myself. I don't have an app. I want to be able to provide loans very fast. I want to open saving accounts, and I want to do transaction. Can you provide me a service as a bank, as a platform, your bank? Can you provide me your platform in order to be able to do those transactions? So this is the use case. So maybe Michael or Navali, if someone like that come to you and said, I have the license, so it's not about the license, but I need a new platform. I can buy one, but it will cost me $500. I don't have them, but I want to digitalize myself. So maybe Michael, your point of view, and
okay,
and then,
you challenge me, yes. No, I would totally see that model that you're describing, right? And that's exactly what's happening, right? The microfinance guys know very well how to do microfinancing, but there are some things that are missing and which the bank has. And then you can connect the two using the API interfaces to build that model. And I think it's not limited to microfinance, right? I mean, I already mentioned insurance, I mentioned Islamic banking, but maybe just to look at loans more generally. I mean, a big topic what we're seeing around the world is improving credit scores. There are very many people, even in the UK, who live hand to mouth, if you like, and they get their money in cash. They pay their electricity and their mobile phone bill and their water and their and everything in cash at some agent, which is hugely expensive. So the poor are being ripped off, quite honestly, by the financial system. And it's only because they don't have a bank account. And so everything is done in cash, and that totally underprivileges them. And if they should ever need a loan because they weren't able to work last week, or if their child falls ill, then they are really in trouble because they have absolutely no credit history, because they are not banked. They have not proven that they always pay their bills on time. And so there is no way that they can get a loan. So the poor unbanked people are very much disadvantaged because of their use of cash. So that is why there are many initiatives that are now happening to wean people away from cash, let them use mobile money at least, or use credit services, so they can build up a credit score over time and prove that they are a good citizen, they pay their bill on time, they don't gamble, they don't overstretch themselves too much, so they can get a loan if they need it. So it's not just microfinance, it's the whole thing of loans being transformed, also in inclusion, especially for those who are very much disadvantaged with the current system. So this is a huge opportunity for the customers, and of course a huge opportunity for new fintechs and the banks.
Thank you, Michael. And maybe Navali, let's say the same. You talk about the two experience that you had in Kenya with the youth, unbanked, I would say, customers. And I will maybe ask for the use case of microfinance again. So if small microfinance said, I have the license, I want to use your platform, and I know that you have a kind of, so they will said, we can connect to your sandbox. We are able just to develop our mobile app, but we don't have the good backend. So if they come to you like that, what will be your position? How you can help them? What is the kind of model that you can provide?
Okay, in theory, everything is possible, right? In theory, you can connect, you can get a thing, but there are some very practical questions that needs to be answered. So the first one is which product, right? And do I already have an API for that product? Because API needs to be built, it needs to be prepared, it needs to be. So if the API exists and the tech, it can be consumed, then yes. The second question is, what other obligations do I have? So I have a regulatory obligation, I have a compliance obligation, and some product that I'm working on, and when I say I'm talking bank, right? Some product that I'm working on needs to have regulatory approval, and I need to be able to make sure that this is fully covered. So we find actually life case ourselves in situations where we were putting some APIs out there with some partner who came to us, and we need to go and present that to the regulator before we get any approval. And during that presentation, the spec get to change, and so you have to get that lineup. And then the last question is a little bit more practical. Do I have the resources, right? Because as a bank, technology is a core of our business, but the reality is we are not technology companies, right? So we have suppliers, ecosystem, and partners that we put out there to be able to deliver these services. So you'll see many organizations, many banks that are struggling with even maintaining their own system life in terms of stability. So if I have to spread myself thin into other organizations, then that could be a question. So like I said, theoretically, it's possible. You can create a pipe, you can create a link, but you need to be as practical as possible in these opportunities, okay? And find a business model that really makes sense, where you can make money out of it. Thank you.
Thank you. And I think we have done, I will say, the 45 minutes. It's sending some insights, hope that the audience had some good examples in Africa, but not only in Africa with Michael. And I will take one last question, is about the user. And we talk about the data that we share. So how the user we can share his consent to be able to, he will accept to share his data, and we talk about the scoring. So how he can be aware that his data is exchanged between different parties. So maybe Vali and then Michael.
Yeah, fine. I can jump on that quickly. You know, there are two things here. There's a consent, okay? And there is an awareness and information. And these are two things that are different. I can get any consent. And usually we give our consent anytime, right? You get into an app and you see a terms and condition coming in, and you agree, don't agree. You click on it and you can get the consent. And that consent, you can use that. I mean, if you word it, if it was worded very well, you can use that in various platforms, in various avenues, in various situations. So, but that's, you know, from a regulatory point of view, you absolutely need to have that consent, okay? But I think that consent is not, for me, where the problem really lies, because, you know, you have all technology to do that. The real problem is, do you have informed customers? Do they know what they are giving consent to? How are you educating them? And I think, especially in an open banking position, as the ecosystem is being developed, it's important that as responsible players, we play that education role. And that's even more important for Africa, right? So sometimes I'm thinking, when we put some information out there, you know, it's in mobile, 90% of our users are mobile, right? Reading all these terms and conditions mobile, on the web it's already very difficult. On the mobile, I bet it's impossible. I don't see anyone going through the thing, right? It's all it's in English. And sometimes it's a quite complex legal English, right? So how do you make that accessible to everyone? Do you have, you know, your agent, for example, who can brief before it's being signed off for, okay, even if it's in local language, this is what will happen with this, so that at least people are informed. So I think that's a big responsibility for every player in the ecosystem.
Thank you very much. Michael?
I couldn't agree more with what Envale has just said. It's that there was actually a scientific study where they once added some naughty clauses in the terms and conditions and said, if you agree to this, we have the rights to your firstborn child. And lots of people signed up because, of course, nobody reads these things. So that clearly is not a mechanism that's working. So we need consumer education is one thing. And a proposal I quite like, but I'm not seeing very much, is, you know, just like in product packaging for pharmaceuticals, you get a very short notice. This is for that purpose, and you should take it for 10 days, and don't do it with that. You know, just one paragraph, not 50 pages of PDFs, but just a short paragraph. You know, you are consenting to give Facebook rights to your balance for this one time, and that's it, right? Just that one sentence. Then people can give an informed consent. So that's one thing I think we need to do. We need to have a better communication of the messages, but not to scare everybody, but because of the way that open banking has been so powerful and so successful, many regulators around the world are beginning to open up all the other industries as well, not just banking, but also the energy sector, health, governments, transport. So we're going to start to have to give consent for sharing our data from all these industries. And that's going to be really hard to keep track of, right? Have I allowed my car data to be shared with my car insurer and my health data with my doctor? And how do I withdraw that? So how do I set up a consent mechanism or a consent dashboard? And how do I withdraw that? This is going to be one of the big challenges going forward. And if anybody's interested, there's some really excellent examples in India, how I think they've really solved that. We don't have the time to discuss that now, but there are already solutions emerging. So that may be the next step of what we need to think about.
Thank you very much for your insights. I think we have run of time. 15 minutes is very good. So hope that all of you guys and the people that are attending has learned more info first. Thank you, Navari. Thank you, Michael, for your participation. Thank you, Estelle. She's not here. She has another conference. So thank you very much. Hope to see you soon for other insight about open banking and financial inclusion. Thank you, guys.
Real pleasure to be with you.
Bye-bye.
Bye-bye.
And thank you for organizing and thank you for hosting. Thank you.
Thank you.